Folio, Folio. Folio means a page of an accounting record. Journal folio means page of a journal on which accounting transactions are recorded. Journal folio number means page number of journal. Debt, DEBT. Debt means something owed to another. Debt means arrear. Debtor, DEBTOR. Debtor is a person who owes something to another. If I borrow a rupee from you, I am your debtor. Bad debt, BADDEBT. Bad debt is a debt believed or proved to be uncollectible. Creditor, creditor is a person to whom money or goods are due, one to whom a debt is owed. Creditor is a person to whom we have to pay money. If I borrow a rupee from you, you are my creditor. Account, account is a record of business dealings as between a bank and a depositor. We are all familiar with word bank account. Drawing account, drawing account is an account that shows withdrawal of money from business. Expenses, in order to earn business income, some cost is to be incurred and this cost is known as an expense. Money spent in production of goods is an expense and is known as cost of production. In other words, expense is a monetary measure of inputs or resources consumed in the business to manufacture or sell the goods. Income, income means what comes in from property, business or work. Money that comes in, receipts, returns, etc. A person's yearly income is all the money that he gets in a year. Synonyms of income are proceeds, revenue, profit, salary, etc. etc. Assets, property of any description belonging to the person is known as an asset. Assets are for self-use or for personal use and are not meant for sale. Land, building, furniture, cash in hand, bank balance, plant and machinery, etc. are different examples of assets. In short, an economic resources which provide benefits to the enterprise is called assets. Assets are broadly classified into two categories, viz. Fixed assets and current assets. Fixed assets are held in the business for a very long period of time and these are used for producing goods and services, whereas current assets are held in the business for a very short period of time. Land and buildings, plant and machinery are fixed assets. Cash in hand, bank balance and stocks are examples of current assets. Liabilities, liabilities represents the debts or obligations that the business must pay in terms of money or services in future. Liabilities represent the total amount payable to others. Sundry creditors, bank overdraft, bills payable, loans taken are different types of liabilities. Liabilities can be classified as a long-term liabilities and short-term liabilities. Long-term liabilities include those obligations or debts which are payable after the completion of 1 year, and short-term liabilities are those obligations or debts which are payable within a period of 1 year. Sundry creditors, bills payable, etc. etc. are short-term liabilities, and term loan, debentures, etc. are the examples of long-term liabilities. Solvent is able to pay all his liabilities. Solvent person's assets always exceeds his business liabilities. Solvency of the businessman increases the goodwill of the business. Insolvent, a person who is not capable to pay his debts is called insolvent. Insolvent does not have sufficient funds or assets to pay his debts. His business debts are much more than his business assets and personal assets. He is unable to settle the dues of his creditor fully. Capital, Capital is the sum total of the value of goods and amount of cash invested by the person in his business venture from time to time. Capital is an excess of assets over liabilities. It can be expressed like assets minus liabilities is equal to capital, or capital is equal to assets minus liabilities. The amount of capital goes on increasing if business earns profit, and capital goes on reducing if there is loss or heavy withdrawals of cash or goods by the businessman for personal use. Capital is a long-term liability of the business. If Mr. Rajiv started business by introducing cash of rupees 5,000 and goods of rupees 10,000, his initial capital amounts to rupees 15,000. Drawings. Drawings refer to value of goods and cash withdrawn by a businessman from the business from time to time for his personal use. If the goods and cash withdrawn by the businessman from the business is for business purpose, then it is not a drawing. Rajesh had withdrawn rupees 300 from the business and had spent rupees 100 for personal travelling and rupees 200 for purchase of stationery for business use. In this case, rupees 100 is a drawing of Rajesh and rupees 200 is a business expense. Drawings made by the businessman reduces the amount of capital. In final accounts, drawings are deducted from the amount of capital. Invoice. INVOICE. Invoice is a list of goods sent to a purchaser, often showing such other information as prices, amounts, and transport or shipping charges, taxes, etc. It is popularly known as bill in India. Discount. Discount is an allowance or benefits which is given by the seller to buyer or by creditor to debtor, known as discount. The amount taken off from a price is discount. It is a rebate. Posting. POSTING. Process of transferring an accounting entry from journal to ledger is known as posting. Every business transaction is first recorded in the journal and then posted to respective ledger accounts in ledger. 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 Ledger is another important book of account. This book is maintained by the businessman for keeping individual records of persons, properties, expenses, incomes, liabilities, losses, and gains. Entries of business transactions are transferred in this book from the journal. Ledger shows the exact amount receivable from debtors and exact amount payable to creditors. After understanding what is bookkeeping and its various terminologies, let us understand what is accountancy. Accountancy means the work of an accountant, the examining or keeping of business accounts or accounting. To derive the exact understanding of the word, we may use it in a sentence as follows. She joined Citibank, but she then decided to study chartered accountancy. Whom do we call an accountant? Accountant is a person who examines or manages business accounts, one whose profession is examining or interpreting business accounts and financial records. Accountants analyze, interpret, and draw conclusions from the accounts that the bookkeeper records. What is accounting? The art, practice, or system of keeping, analyzing, and interpreting business accounts is accounting. Accounting enables companies and governmental agencies to summarize and report in an understandable fashion a large number of transactions. On this side, this much only. The end.